Okay, let's have a look at the Euro US for the 4th of November 2015. My first trade was by way of entry order off the top of this channel here, which was in turn the 50% pullback of the overall channel leading up to Frankfurt. Okay, you can see the market oscillated in the top, broke it, bounced on the bottom, pulled back to 50%, and then Frankfurt took it down. Okay, volatility didn't increase until here. So span that first channel. There's your double channel. There's your take profit. When the market did break through here, the candle formation or the price action was very violent, bouncing up and down. I'd be happy for you to readjust your take profit to that value, which gives you an initial 21 pips for the first leg. Okay, before I delete that channel, you can see an entry order should be taken off here. However, this formation doesn't look like the low of the day. You're looking more along the lines of something like this, where you get a failure, a price reach, but a failure, and then a strong push in the other direction. Now, I know that doesn't eventuate into even a strong price run. It's not a reversal, but that's the sort of pattern you're looking for. In this scenario, you'd be expecting the market to find a lower low before doing any significant retracement. All right, now with that in mind, I didn't take profit on my long by being greedy. I should have taken that profit at that point. There's 13 pips, so 12 pips let go back into the market. A mistake, but mistakes that will be repeated by every trader who is hopeful of a good run. Okay, let's have a look at this channel. Now clearly the market's just bounced exactly where it came from, which is here. So your entry order should have been on that point. Your focus should have been more towards a short bias than anything else, but in any case the market bounced there and London took it down. Normally we'd be hopeful of a break of this channel and then a doubling of it. Now that didn't happen. When the market gives you uncertain price action like this, it's very difficult to determine a clear 50%. When you've got to reach out through there, that's easy to pick out through the noise, where there's a lot of noise in here. So what I'll often do is look at the overall range. So we're looking at around 12 pips. So 6 pips is relatively conservative. So bring it up through here. Now the market does bounce in that zone. It pulls back here. You'd be very, very concerned in this area. In fact, I'd be very concerned by this wick. I mean, that, if it had continued, would be potentially a nice low for the session. If you adjusted your take profit to that, it would be very reasonable, and you're looking at another 20 pips, so 41 pips for the session, discounting the fact that no profit was taken on that long. I did take a long here, and you can see that the channel bounced there. Sorry, I should have put it there, and repeated the bounce there. Now, none of those moves went everywhere. It just range traded in that channel. Not a stellar night for a channel break system. If you do decide to trade internal channels, like just that short leg and not the bounce, the only word of caution I would give on it is that you are significantly reducing your reward. So risk to reward is essential. In this scenario, you take a risk of a few pips and you get 20 pips. Here, you're taking the exact same risk for half the return. So just bear that in mind before you look at harvesting scalps inside a single channel. Well, I hope this has been beneficial. Have a good session tonight, and I will review the 5th tomorrow. Okay, bye.